Crypto markets cheer as Trump wins the US election in a landslide, taking Bitcoin to new all-time highs above 75,000. Bond markets crumble, suggesting spending policies and tariffs could reignite inflation. And Ethereum outperforms by 10% on hopes that less regulation will promote more growth and innovation in DeFi. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran from Options Insight. I've got my man Dave here from FRNT, and I've actually got Stephane Ouellette, CEO and co-founder of FRNT Financial with us today. How you doing?
I'm doing well, thanks.
It's good to have you here. So he's going to be on best behavior because his boss is sitting next to him.
I put the blazer on today.
Yeah, look at that. I've never seen you so smart. All right, so Trump's in, guys. We're going to have to talk about that.
Yeah.
Crypto's loving it. What do we reckon?
I mean, my first tweet I put out was like, don't overcomplicate it. Like, buy Nasdaq, buy Bitcoin. It's all going up. It's going to be volatile, right? People pay the highs, then get washed out, and we'll see some of that, no doubt. But I think this is the start, right, of the bull market proper and the cycle.
Yeah, so Stefan, I mean, FRNT, I think we should probably start with a quick background on that, right? You know, when did you guys start that, and what's the vision over there?
Yeah, so thanks for having me, first of all, guys. I didn't get
great to have you.
Yeah, so FRNT Financial, from just a headline perspective, and I'll turn back the clock a little bit, is a specialty digital asset investment bank. So we provide similar services that you'd expect in any other asset class to the digital asset segment, which we believe is extremely underserved from an institutional services standpoint, and we really feel as though this is T equals 0 for that institutional development. The background in terms of how we got here, I started looking at the digital asset segment, very closely in 2013 with my co-founder Adam. We actually almost launched an exchange at the time. However, we were sideswiped by a little crisis called MTGOX, which really torpedoed that plan. And to be honest, at the time, I wasn't really sure what was going to make of Bitcoin. I'd kind of gotten indoctrinated into the concept of private money. I had a belief that something like this was just a general positive for the world, and understood that like the MTGOX crisis wasn't Bitcoin's fault. It was the infrastructure, like every crisis in the digital asset space has been. But I didn't have necessarily the belief at the time that the confidence would return to Bitcoin, and maybe it would be another asset that could potentially fulfill this kind of global need in the future. But, obviously Bitcoin's resiliency has showed itself. I think that anybody who thought that FTX was going to kill Bitcoin wasn't around for MTGOX, because that was, about 25% of the world's Bitcoin disappearing overnight, and managed to make 70 times highs from that level. So, went back to my job in traditional finance. I was an equity trader. Adam was a computer engineer who had been an entrepreneur his whole life, so had a really nice kind of overlap in terms of our skill sets. And when the 2017 market cycle took hold, the thing that really jumped out to us at that time, directionally, obviously very impressive, but it was, the infrastructure that come into the space. You had platforms like BitMEX that were providing like a larger toolkit for institutional traders in terms of the trades they could do. Stablecoin infrastructure had really started to robustify, and we viewed the market as having perfect circumstances for arbitrage. And so we started, our kind of full-time professional life in the space by building, what we called at the time an arbitrage fund in digital assets. Right now, those strategies are more broadly referred to as market neutral. We ultimately, ran a hedge fund strategy. Formalized it in kind of the 2019, 2020 period. So we may have been the first kind of, formal market neutral fund strategy. Effectively, those were some of the best trades I'd ever seen. I worked on a trading desk pitching hedge funds, equity trades that were 8% annualized with a lot of risk. And here I'm seeing 40% cash and carry basis trades, cash and carry trades on some of the best capitalized startup platforms in the world, where all you're doing is taking counterparty risk. And so the idea for FRNT really came out of that you know, just the idea, like, I got to tell my clients about these trades. Like, these are fantastic trades. They're way better than any equity trade I've ever pitched. So we need to create an institutional sales desk that pitches these trades to my historic clients, which are global hedge funds. And so, you know, our first kind of foray in building that out was building synthetic derivatives that would provide, you know, either, you know, directional exposure to a specific asset, but really kind of structured trades were what we focused on. And from an ethos perspective, what we were doing there was building kind of a synthetic bridge from traditional finance to the digital asset space. And really what we saw at the time, even as early as when we built that company in 2018, was that there was going to be a lot of these bridges that needed to get rebuilt. There was going to be a lot of expertise that needed to have the combination of traditional financial expertise and crypto expertise. So we set out to build that business. And what that's turned into over the last five plus years is essentially a first service investment bank for digital assets. We have capital markets business lines where we have still our OTC derivatives business lines. We have spot trading technology. We have different lending services and an advisory side of the business where we do merchant banking, where we do consulting, where we've really gotten into distressed over the last little while. So that sees us work directly with estates, with holders of bankruptcy claims, et cetera. So, you know, we've tried to build a business where if you're a corporate or an asset manager that's getting into the digital asset space, we can cover you front to back. And, you know, I think that there's very few firms globally who have stuck with this, you know, institutional dynamic over the years because it hasn't been really where the puck's going. It's been a market that we've kind of been waiting to emerge. And I would say that, you know, after now kind of 3 mainstream market cycles, or 2 and now coming to the 3rd, I think that that there's going to be a lot more firms taking this asset class very seriously.
And has the introduction of the ETFs this year brought in a different kind of, you know, investor? Like, you know, have the asset managers become a bit more willing to get involved now that the endorsement is there from the BlackRocks and even the government now that Trump's in?
Yeah, so I would say that there's been a couple dynamics that we've seen play out from the ETFs, and some really strong signaling for the future is what I would say. So, you know, keep in mind that after FTX, which, you know, happened at the end of 2022, we had a period where essentially like the banks that supported crypto were shut down. And, you know, you had a blow up like Silvergate, and you had a closure like Signature Bank, which was done under very kind of, let's call it, uncertain circumstances. It really seemed as though they got closed because of the fear of them servicing crypto. Anyways, I don't get too much into that. But you had this incredibly antagonistic dynamic out of the government that seemed very one way, you know, that there was going to be this, I mean, there was even kind of choke point 2.0 kind of discussions that were happening around, you know, just kind of wiping out the industry. And what I would say is that, you know, BlackRock in particular coming into the industry, which, you know, it's really impressive, like the global brand that they have. I mean, even governments, you know, we went to a discussion with a very senior UK government official who viewed BlackRock's entry in crypto as a proxy for why this country should be more involved in the digital asset space. So I say that the ETF dynamic really put a halt to just this one-way antagonistic traffic out of the US, which of course many countries take a major signal for in terms of how they should deal with specific financial service dynamics. So what I would say is getting BlackRock and other, you know, large asset managers, don't want to discount them, created a massive, an unprecedented growth in the crypto lobby in Washington. It went from being, there was just a bunch of, crypto natives that were trying to get things to go, to now having some extremely strong supporters on that side. And since the ETF, we've seen a huge shift in clients' fear around touching the space. I would say that that banking rails in general have gotten a lot more easy, just in terms of wires hitting, related to crypto transactions and all of that kind of stuff. I don't think that the ETFs in themselves are a massive kind of asset management renaissance in the space. Like, passive ETF products aren't really the financial services awakening that a business like ours is really set to capitalize on. I mean, creating a passive ETF product is a relatively simple asset management exercise. Although, in this case, it was very complicated from a regulatory perspective. But what we view that is like the first products that these firms are going to come into. They're the beginning of digital asset arms, which are going to lead to much broader sophistication and scope of activities of asset managers all over the world. They're dragging the sell side into it a little bit, but there's only so much the sell side can do at this point, which I think creates massive opportunities for firms like ours. There's a gap where either a lack of expertise, a lack of ability, or a lack of willingness. I mean, keep in mind that, you know, a firm like JP Morgan, which is a massive, you know, potential competitor for a firm like FRNT, you know, their C-suite doesn't all agree that this is a good thing, right? Like, imagine that uphill battle if you're someone trying to make that work at a firm like JP Morgan. Whereas at FRNT, that's what we do. You know, we don't question whether or not we should be in the digital asset arena at all. I mean, that, you know, that eats up a lot of airspace at firms where we're just moving forward, right?
The, you know, we've been anticipating this move in crypto. If Trump gets in, does it trigger the next leg higher? We've been waiting all year for this next leg higher, right? What do you reckon, Dave? Like the macro setup, the bond market looks a bit shaky. That's the only thing that maybe...
Yeah. I think that's the only concern at the moment. And actually, it's going to be interesting tonight. We've got the Fed tonight. So I guess when this comes out...
Is the Fed an event?
I think it is.
Why?
I think it is. I mean, they're going to cut rates. I actually think, obviously, we're playing this kind of reflation trade on Trump. But one thing that's going to be interesting tonight is Powell's mentioned before about rising term premium in bonds and expressed like concerns around it. I think there's a chance that he talks about that tonight, and potentially it becomes a trigger to end quantitative tightening. So I can see a situation tonight. I think the market's gone, all right, okay, we're not going to get as many cuts and everything now because Trump's going to go and spend a lot of money. He's going to start drilling. I think it's too early to start talking about that, and the Fed can't really start doing anything about that yet. So they're going to just...
not in the data.
It's nice, yeah. So they're going to keep reacting to this kind of lag data, right?
So the Fed on the front end is going to react to the lag data, but the long end is looking forward and saying, okay, this is inflationary, and the long end bonds are getting hammered, and the Fed's going to see that and be spooked by it. Yeah,
and like if you think they cut 50, right, but financial conditions have tightened quite a bit since they've done that. So it'd just be interesting to see how they navigate around that. I think we might see a more dovish Fed, which is going to give us even more like firepower for this move. But yeah, it's we've spoken before as well. I think you know. Certainly, I think the election has kept a lot of money sidelined. So I think there's a lot of money to come back into this market. I think long-only managers are underperforming benchmarks. So pain is higher. They're going to need to come in and chase this. So I definitely, for me, this isn't a fade. And then also, I mean, like our conversations, Steph, with clients and stuff, the election's been a big thing, and
been holding people back.
Because I think everyone now gets it. You know, everyone gets like this is an asset class that's here to stay. They can see in what, you know, an FRNT financial building, like that kind of investment bank for digital assets. They kind of get it, but it's like a question marks around like the regulatory environment. And I think everyone was a bit like, obviously, if Trump comes in, then it's really go time. I mean, to be honest, Kamala wouldn't have been disastrous because she certainly seems a bit more open. But we were just slowly edging. It just feels now like it's kind of go time. And we were speaking before about, you know, for all what's gone on at FRNT, say for the past sort of 5 years, and going public and getting to this point now, it's like, it feels like now this is what the business has been built for. So I think, you know, obviously
start of a new cycle.
Start of a new cycle, yeah. And the one thing... Obviously, we've been in a bull market in terms of price for Bitcoin and stuff, but I think industry-wise, we've been still in a bear market, and maybe in the last couple of months starting to maybe just edge out of it. But I think we can now start to see that fly, and I think more money's going to come into the space. I mean, like if you look from like the VC side of things and stuff like that, it's been dead, right? It's been money's not flying around, checks aren't being written like they were in 21 or have you. So it's going to be interesting now. But I think, I think we're really gonna start to see this cycle take off, and that'll reflect both in businesses, hopefully like ours, and then also in price. And
I'll tell you what I got very wrong. I was surprised about was I thought Trump gets in, Bitcoin's going to lead the rally. How wrong was I? Ethereum has outperformed by 10% in the last 24, 48 hours.
Yeah, yeah.
What do you make of that, Steph? Does that make sense to you? And like, is that something that's going to continue?
I think that's an unusually sensible market response from the crypto market. You know, that the crypto market's famous for, or at least famous with me, for having initial reactions that don't end up being the longer term reactions and all of that. But I think that makes perfect sense. I think that the Trump victory is much less fundamental to Bitcoin's trajectory than it is to some of the more experimental elements of the digital asset space.
Okay.
You know, I think that the macro dynamics are very well ingrained in the Bitcoin move. You know, I think that basically the Bitcoin ETF accelerated the market cycle, but these market cycles have played out in very kind of raw supply demand, very similar periods of which that they've seen to come back, you know, very much associated with the macro environment. And you know, I think that as we enter a liquidity cycle with almost bear market level attention to Bitcoin, if you look at kind of major kind of internet activity metrics and very little leverage in the ecosystem relative to like a FOMO environment, that, you know, Bitcoin is really poised for a massive move. And I don't really think the US government's situation would have had a major impact on that. Now, what I think it's going to have a major impact on is going to be around willingness to both build and invest in experimental parts of the crypto ecosystem. Because, I mean, at this time last year, if you talk to a US platform, they would have told you, I don't know what I'm going to be able to offer in the future. I might be able to just offer Bitcoin forks, and maybe they'll cherry pick a couple assets that end up becoming, you know, not deemed as unregistered securities. So, you know, I think that for, you know, the DeFi ecosystem, you know, Trump's already kind of maybe gone a little bit ahead of himself in terms of how far he's moved into the DeFi ecosystem. It's a highly experimental ecosystem. You don't want him to have to do kind of a reverse if he steps too far. So I think, you know, there's some nuances to be had there. But
aren't there all these Ethereum killers like Solana and now Sui and all this? Like, isn't it hard to get as excited about Ethereum when there's all these other alternatives to it, basically? Or do they just all have just so much upside from here that it doesn't really matter?
No, I think that's a huge issue for all the, you know, the DeFi associated tokens, is that this, you know, switching costs are very low. They seem to trade on momentum and narratives. And in fact, like, I mean, you know, the market cycle that we were talking about when I came into the market, like like EOS was a proof of stake, you know, token that was basically what Ethereum ended up transitioning to, and you hear very little about it. You know, they come and go. The Ethereum move is, like I said, sensible response, but, you know, below at the surface, I think I'm right. The next layer of that is like, okay, well, you're basically treating Ethereum as a DeFi index, and it doesn't necessarily going to accrue all the benefits from a broader DeFi development. You know, you aren't guaranteed that building is going to happen on Ethereum. It's, you know,
because you need speed.
Yeah,
isn't that the big problem on ETH, right?
Yeah, I think there's a lot of challenges that are happening in the Ethereum ecosystem. I mean, I think, you know, when Ethereum was created, it was created under it was supposed to be the world's computer, right? Like, I mean, people, you know, that was in 2014, and they eventually realized that was extremely cumbersome and not necessary. So they've pivoted into being the smart contract development platform. And now there's a lot of smart contract development platforms. So I think Ethereum is having a bit of an existential crisis around, you know, it's not viewed in the same kind of like hard money as a Bitcoin is. It's kind of trying to figure out. So on the surface, yes, it's a sensible, it's sensible for Ethereum to be outperforming Bitcoin, but
it's a trade. It's not necessarily the future.
A step lower is that, like, wait, it's a little more a step further is it's more complicated than that. You know, is Ethereum really the one who's going to accrue all the benefits from all this DeFi experimentation? And there's a lot of questions around that.
But for people who want to say put money to work in the space, then they should probably diversify themselves across a few of the alts, I guess, right? Like, rather than just piling into ETH, I would guess.
Yeah, of course. Yeah. I mean, one thing. I mean, we've spoken about ETH quite a bit on here, and I've been expecting for a while for it to kind of finally catch up. And when we talk about from a trading perspective, like often you just get a few like things start to align, and it becomes quite an obvious trade. And obviously, as you say about, you know, with the Trump government coming in, it's like, you know, going to be probably friendlier towards the sort of DeFi space, so the DeFi proxies. And then combine that with the fact that you've got rate cuts coming from the Fed. We've done 50, we go get another 25 tonight, probably another 25 December. So all of a sudden, like yields within DeFi look more attractive. So that whole space just starts to come alive. You've obviously got the ETH ETF. It's been beaten up. It's not performed. So it just becomes just a nice trade, right? To go, this is, and I think that's what we're seeing.
On that point, the options market kind of agrees it's a trade as well, like for the next few months, because it was interesting. Like we didn't see as much bullish flow as I thought we'd see in Bitcoin this week in the last couple of days. We saw a bit of profit taking on calls in Bitcoin, but we saw adding of call spreads in December, in March 25, some January calls as well, all in Ethereum. So it felt like there was more of a bullish flow dynamic in Ethereum. And there was actually some hedges that were put on. You know, we were talking a few weeks ago, people were doing March 25 risk reversal hedges on Bitcoin. There was more of that flow still.
Really?
Yeah, there was.
Interesting, yeah. I mean, it doesn't, like the market doesn't feel frothy at all, does it? Like,
no, I think that short-term options are really the only thing that you saw a lot of pre-positioning around in terms of all the kind of, more quarterly, dynamics, and longer term 30-day dynamics, like aren't even elevated. I mean, we spent a lot of time at our firm looking at, futures and perpetual swaps and peer-to-peer lending markets and those rates for kind of, more cyclical leverage metrics as opposed to, like overly short term. And I mean, basis looks like it's barely moved. I mean, it looks like what you've seen for the last year or so plus. And, you got a little bit of a kick up in some perpetual swap rates, but then they faded very, very fast. And, peer-to-peer lending market activity is happening, in the 10 to 15% annualized range on US dollars. In frothy markets, those rates go 40 to 50% annualized and can spike to even crazier levels. So, and it's amazing to me. And I think it's a sign of the general macro environment. We've come out of this tight capital environment. There's been so much flowing to like these large tech companies and all of that you've had so many people kind of take this space off their radar. But for those of us that have kind of stuck with it, I mean, this is about as bullish a dynamic as I could have ever imagined. You have what seems to be, like central banks have shown their hand that, we're going through a cutting cycle, the path of cuts, whatever, I think we're going through a cutting cycle. I'd look at like kind of the binary truth there.
China stimulating.
In fact, I would characterize it as this is an unprecedented lack of interest in managing deficits. Like I think that basically world governments all around all at the same time have basically said, okay, well, this is just not going to be something that we care about in the future. Oppositions are stopping, it's less of a talking point for opposition parties and stuff like that. Exactly. So you're entering what is almost
game is just,
it's just crazy. Like you're getting it. This is almost like a global emergency liquidity like situation. Like it's almost like we're entering, like we're trying, like the dynamics are approaching that we're trying to stave off a crisis. And you've got Bitcoin with very little mainstream attention. I mean, we all woke up thinking about,
but that's because AI stole the limelight, right? This year, it was all about AI, right?
I think it's very similar to what you've seen in prior market cycles, honestly. Just even from the Paul Tudor Jones call. Okay, so Paul Tudor Jones, like 3 weeks ago, said that he sees inflation everywhere. He's buying Bitcoin and gold. The last time he said that was August 2020. It took about 3 or 4 months for the market to actually hit a breakout, and then you got FOMO coming into 2021. And I think that you do need these flashpoint events, such as a definitive breakout in Bitcoin price, to get Main Street back to thinking that this is happening again.
Yeah, I mean, proper breakout needs to get the press attention. It needs to remind everyone that it exists. It's breaking out. It's doing what it's supposed to do. On the gold point, though, it's interesting, right? Crypto up 10% yesterday on Trump. Gold down 3%. Yeah, so if inflation's coming, bond market's getting nailed, and gold's an inflation hedge, according to Paul Tudor Jones, who's a lot smarter than I am. Why is gold down 3%?
I think that so gold being down 3% yesterday, I do think is noise. Is it's tricky to explain, like, and all of that, but I think that's okay. Particularly with Bitcoin, like there is a critical mass of gold traders that sit at their computer every day and try to price in every little fluctuation of global activities. So when you see inflationary events, you often see gold react, and sometimes Bitcoin doesn't react. And people go, and then I'll get, calls from the media saying like, why isn't Bitcoin correlated to, gold in this situation and all of that? And I kind of go, give it a second.
Yeah. It's not every
Because
tick, right?
What these market cycles that attract new entrants, and when you get kind of a, above the power curve and you're into that kind of breakout environment, the way these market cycles have played out is that, it's like catching flies on something sticky. It's like these market cycles, you lose a ton of people once the market sells off, but you keep a couple more people. And then that serves as the very strong base for the next market cycle. I think you're seeing a very similar market cycle play out this time. Keep in mind that like a lot of people lost a lot of money on digital assets in 21, 22, out of 21 into 22 into 23. And it takes a while for those same people to recover their wounds. And in digital assets, in equity markets, it tends to be about 2 years, 2 to 2.5 years. If you look at really when retail started getting back involved in equities after the financial crisis, 2.5 years. And, we're kind of coming up to that point now where you're getting to the kind of the bookend of what would typically be, bear market industry dynamics. Of course, the assets have done well, but there's very little investment that's come into the space from outside of just the largest equities. Like we see it all the time in some of these smaller companies. Really, companies that have really amazing stories are hard to get checks written for. You're still talking to a lot of the same crypto native investors. You're not we don't see traditional financial players come to us right now and go, I need crypto exposure. What do you have? That's coming. And the fact that we're above all-time highs and we're not seeing any of that yet, I think speaks to the magnitude of which this cycle could really engulf the world. I mean, it's just, you look at Bitcoin searches on Google right now. It looks like it has for the last 2 years. And, my old classmates aren't calling me up to talk about Bitcoin. Little bit around the Bitcoin ETF, and a little bit like kind of yesterday. But in 2021, I was getting calls like all Saturday from like old classmates that said, didn't want to bug you during the week, but I've got a problem with my Coinbase account.
Joe, it's funny as well. You mentioned gold. The Bitcoin gold chart looks beautiful. It's like broken like the downtrend.
Nice.
And I think that could really, gold traders love trading momentum. That trade could really, really kind of fly. I think
gold options are coming as well.
Yeah.
On, Deribit.
Yeah.
Deribit are actually listing gold options. So traders will be able to put spread trades on, cross margin, all that lovely stuff to do RV trades.
I think Peter Schiff is going to be
24/7. I like.
He's going to be the biggest trader on Deribit.
I like that on Deribit. I've been surprised that that there hasn't been a bigger merging between the digital asset and gold market. Tether Gold has been around for years, and it's still got a like sub-billion-dollar market cap. Like, forgive me, I haven't looked up in a couple of weeks if it's gone above that, but you'd think that it's such a superior product than what you can get in the gold market because it trades 24/7. I mean, why would I'm surprised that more gold desks aren't using it as a hedging mechanism. Yeah. For the over the weekend risk.
But I guess it's a correlation thing as well. There'll be periods where gold correlation to Bitcoin is really high, and it will be working as a brilliant hedge against like each other. But then there will be periods where that correlation breaks down, like we've seen recently, where Bitcoin wasn't moving and gold was just ripping higher.
I'm saying I'm surprised that there aren't more gold traders using these crypto gold token, like these crypto-based gold tokens, like as mechanisms.
Oh, to hedge their other precious metals.
Yeah, like they've got they're holding they're over the weekend, and this isn't happening, or else we'd see way more activity. Over the weekend, you have some event that thinks that you're going to impact your gold position on Monday. If you're an options trader, you're going to have your deltas are going to be way off on Monday, and you don't like look at potentially doing something in a gold token that trades 24/7. I mean, I'm shocked by that. Like, and we've tried to have those conversations with gold desks and all of that, but I think there is a bit of an antagonistic relationship between gold and the crypto ecosystem. Surprised that it's gotten in the way of business, but it apparently has, and I think eventually it's going to happen. It's just kind of been surprising how long it's taken to not have this clearly superior product.
So anyway, obviously both extremely bullish. No surprises there. And I'm bullish as well, for the record. Okay. But like, what do we think realistically in terms of price by the end of the year? Have we got any thoughts around that? Do you think 100K is achievable? You know, I think Fast Money's obviously letting some length go up here, looking for the Trump move. We got it, and now they're letting some go. But that often happens, and then the real move comes in later as people agree that the cycle is starting, and just, you know, there's going to be a lot of positive news flow coming. But what do we think? Do we think 100K is achievable? Because I'm seeing a lot of sellers on the upside strikes above 100. So the options market is maybe saying, nah, 100K is a bit of a stretch.
You see how quick Bitcoin can move, right? I think 100K is definitely achievable. Again, like we've just got like this liquidity cycle picking up. And actually, if you look historically how Bitcoin's performed through elections and stuff, we are kind of really on course for that move. And yeah, everything's lining up from the Fed cutting rates. I mean, liquidity in Q4 in the US like should be like pretty ample.
And China's going to announce their fiscal this week, right?
And now, I think so. They're talking about 10 trillion yuan. But
is that priced in yet, though?
It kind of is, right?
Equities didn't rally.
They also said if Trump gets in, that it goes north of that.
Yeah, because they need to counter his tariffs.
Exactly, right. So
I've got a question on that, on the tariffs thing. Have you thought about the idea that Tesla sells all these cars to China, right? And so it's like, is the whole and because now Elon's so tied up with Trump, well, what's going to happen there, right? He's not going to be a fan of that relationship between Tesla and China. So
I don't know, like we've had 4 years of Trump, right? And he goes like hard with like, right, we're going to go to the tariffs, and everything's a negotiation with him,
it's a deal making.
It's a deal making thing,
right?
And so I'm a lot more sanguine on
the tactic.
Yeah, I'm a lot more sanguine on people. Oh, he's going to just carpet the tariffs on everything. He's saying he will, right? But he also says a lot of shit. It's a
threat, isn't it? Like when you're trying to make a deal, when you're starting a negotiation, you're going to come out threatening it to be hard and aggressive, right? Otherwise, no one's going to believe you. Yeah. Right.
That's true. Ultimately, he wants a fair deal for the US. He wants to, you know, he wants to make money, right? And he's going to need sort of China as well on that. So it'll be interesting. It'll be interesting to see where that goes.
It's interesting. China did dip yesterday, but it's already recovered. So net is flat on 2 days. China stocks.
And that was really interesting, right? Because that would have probably been the trade that you go, right, we hit that.
And we saw the same thing happen in Brazilian stocks, same thing happen in Mexican stocks. They all knee-jerk lower on the Trump. They all ended in the green.
Yeah.
I don't know what that means, but it's interesting to see it, right?
Yeah.
Maybe Trump's not as scary as everyone thinks he is.
No, well, there you go.
All right, boys. Well, it's been a pleasure having you on, Stephan.
Thank you.
Really, really good chat. And as always, Dave, good to see your updated views.
If I can just say one more thing on the price prediction, just to kind of send us off here, okay?
Of course.
So, not going to say whether or not it goes up to the end of the year. Going to skate around that a little bit.
Boom.
But there's never been a crash in Bitcoin or a material price decline that's happened like where the cycle's reversed, where that's happened from low attention, low leverage, and on-chain metrics where unmoved Bitcoin hasn't moved in, you know, like over 60% of unmoved Bitcoin hasn't happened.
Very good
They
point.
happen in high leverage situations. They happen when everything in the world in crypto is getting financed and it gets ridiculous. And they happen when you're getting calls from, you know, people very far outside the space about the space, a huge amount of attention. So
taxi drivers, I haven't been in a taxi and heard anyone ask me about Bitcoin in quite a while.
Absolutely not. Right? And so, you know, it would be a completely, different market dynamic, which I've seen no evidence for if we just kind of faded away from this.
Steph, you are making me want to go and sell lots of put spreads now. Yeah, might have to do that. All right, guys, that is a great point to end it on. But yeah, it doesn't look like we got a dip now. So get ready. The cycle's about to start. We'll see you next week.